Welcome back. We are now in the middle of 2025, and we are seeing things like this. This famous athlete said he's selling his rental properties to buy Bitcoin. But we are now at all-time record highs in the Bitcoin price, and a lot of people are anticipating much higher prices from here. But are we in a bear market or a bull market? Are we in a rotation? Well, I don't think it really matters because there's money to be made whether we're in a bull market, in a bear market. Are we rotating in or out of a bull or bear market? But what I've been talking about on my videos more recently is preparing for the potential and the knowledge that eventually we will correct. And being prepared for that is really the key. And so in today's video, we're going to be exploring kind of what's going on in crypto, where the risk level is, and understanding how to make money, whether we're in a bull market or in a bear market, and how to identify which ones we are in. And so make sure you guys are subscribed to this channel. We talk about crypto, blockchain, and investing every single day. Sometimes we do deep dives into individual cryptos to understand what they actually do. And sometimes we talk about the macro, the zoomed out picture of what is going on, not only in American markets, but the global economic conditions, and understanding how this is going to impact the price and the movements of these assets. And so hit the subscribe button, give the video a thumbs up, and let's get right into it. Now, before we go over to this famous athlete, Alex, he's an athlete with San Antonio FC, and he basically did another tweet where he talks about dollar cost averaging in, buying in, thinking about the long time horizon, which I do agree with. He says, don't obsess over Bitcoin entry prices. He said, I don't know what my exact cost basis is, but under 100,000 with a long enough time horizon, I don't think it matters. What matters is getting your hands on the asset and stacking in size. Holding the best money for decades will outperform even the best fiat traders. Bitcoin is in the process of being de-risked globally. If you're obsessed with entry points, you'll end up missing out on the best trading days of the year. Don't optimize for the wrong thing. You already found the right asset. Instead of optimize your daily life to spend less and earn, and put the rest into Bitcoin and do it for a long time. Easy in theory, harder to execute. Stack on. Now, I do agree with this, but I don't necessarily know for the everyday person saying, don't worry about just buying at, $100,000 because we're going higher and you'll miss out on the best trading days of the year. But at the same time saying, don't trade, think about the long time horizon. I mean, yes, majority of people who are investing are thinking about the longer time horizon, but if they're looking at their portfolios every day, they want to see movement. And if they're not seeing movement, there's going to be an issue. And if they see movement in the negative, it can really put a sour taste in their mouth. So I definitely do agree with stacking and having a long time horizon. But what we do on this channel is try to identify the tops and bottoms and entry points in the market so that we can make maximum profit on our trades. And some of the trades last multiple years. Some of them have never been closed out just yet. And some of them have, they go in and out within 1 day or 1 week or 1 month. They're very, very short-term trades. And so we really need to understand where the economic conditions around the world are, because regardless of what any Bitcoin maximalist says, Bitcoin is very highly correlated with traditional markets now and has been for quite a while at this point. And by the way, the ETFs and all of Wall Street involved, that is to stabilize the pricing. And so, yes, we are going to see run-ups in the price. We're going to see massive moves, but we are literally at all-time record highs, which brings us to this. This user on X responded to, it looks like a YouTube comment, and it says, if you're already winning at Monopoly, why, and have your pieces all over the board, why would you want to switch games? Well, this guy who's a CFA, 10 years of experience in the finance industry, he said, perfectly describes why some people want to keep the current financial system alive as long as possible, because they already have their Monopoly pieces on the board. And guys, by the way, the game of Monopoly, like, people are like, oh, this is the longest game ever. Yeah, that's the point. The game of Monopoly never ends, because once you have the Monopoly, until it gets broken up by people saying, well, this is not fair, we're not playing this game anymore unless you give up some of your properties or we start the game over or whatever, it just keeps going on and on and on and on and on. And here's the deal. Eventually, it will change, right? Either you'll stop playing the game will reset, the game will change, the rules of the game will change, people will come to an agreement to re-diversify. Like there has, otherwise it just keeps going on, and everybody loses out except for the person who owns everything on the board. And so this is how market cycles operate, right? And when people are doing extremely well, they don't think about the negative. And in the when they're not doing extremely well, they're thinking about the positive. But you have to do both, right? When we're at the top of the market, you have to start thinking, well, we are due for a correction. Well, we are potentially going to come down at some point, because everybody keeps pointing to the strategy of the world, MicroStrategy and MetaPlanets and all these companies buying Bitcoin. But the idea here is that yes, they're buying Bitcoin with debt that they're able to acquire very, very easily right now. But what if that stops? What if the geoeconomic conditions around the world start to turn? And by the way, they are, and we're going to go through that in just a minute. But understanding like how Bitcoin is going to play, even in the short term, this is a great opportunity to increase the bag size, right? Because if you sell at 105,000 and then we go down to $40,000-$50,000, which people are, Cryptoviser, how could you say that? We're never going that low again. Well, I don't necessarily agree, but then you can essentially triple your holdings if you purchase at that price. And so we need to understand where the market is. And so that brings us to Peter Brand, who's a very long-time trader, and he does a lot of analysis on charts. But he specifically says, like, we can't use charts to predict where the price is going. We can use it as a guide as to what potentially is going to happen next in the markets. And he posted this saying, is Bitcoin following its 2022 script and setting for a 75% correction? Well, it doesn't hurt to ask. And he shows the two different charts. The top chart is where we are now, and the bottom chart is in 2022. And you can see massive drawdown from there. And as I've explained, if you look at the Bitcoin price chart objectively, which a lot of people in crypto are not able to do, you can actually see double top last year into this year, and then we are basically double topping right now again. So this will be a potential quadruple top, and people are like, but Cryptoviser, we're going higher, we're going higher. Okay, so if we go to $400,000, are we going to stay there, or we're going to come back down? I would imagine all these people that are anticipating and pushing this whole narrative of $400,000, $500,000, they have a lot invested in it. And so if we go that high, they will sell regardless of what you think or feel. And by the way, the geoeconomic conditions are not that great right now. This user on X, she's called the Job Chick, workforce intelligence for CFOs and investors in oil. She said, you got to be kidding. Microsoft is about to lay off another 8,000 people on July 2. That's just a few weeks away. That's 14,000 jobs gone in 2 months. Not performance cuts. Entire sales organization got wiped. Mid-management, donezo. 30% of Microsoft's code is now AI generated. AI is showing humans the door. And she says it gets worse. She said it's brutal for those get laid off at Microsoft. And by the way, it's not just Microsoft. There's a lot of major companies doing extreme downsizing right now because they're utilizing AI to make the jobs that they're keeping more efficient and potentially doing it themselves. She said there's a 2-year hire reban if you're let go for performance. So you can't get rehired if, the economy turns around and they start rehiring people. A new good attrition metric that they're using. I'm not really sure what that exactly is. But anyway, she said you got 5 days to choose. Take 16 weeks severance, which is 4 months, or go on a performance plan. But if you fail at the performance plan, meaning you get fired, you get nothing. This is Amazon level unregretted attrition, also known as the new standard in big tech. So yeah, I mean, guys, it's not just Microsoft where this is happening. Amazon arms warehouse with Vulcan, an AI-powered robot with a sense of touch. Vulcan, this AI robot in Amazon warehouses, can handle 75% of the items at human-like speed, taking on tough tasks to boost warehouse efficiency. So, you have Microsoft where you have engineers and coders gone, right? And we just talked about Internet Computer's Caffeine AI, which can basically code and write programs, and it's a self-writing internet, right? So you don't need these programmers. You're still going to need some, but I want you guys to think about this. 14,000 people were laid off just from one company in the last few months. Now all these people are going on the job market, and the job market is already declining because of AI taking over jobs. And so all these companies that historically, like even pre-pandemic, because once the pandemic hit, everything kind of changed in the job market, where you saw people, filling out thousands of job applications and maybe getting one callback. And that's because there's so much competition. Everybody's getting laid off at the same time, all these different companies in all these different, categories of industry, right? It's not just Microsoft. It's not just Amazon. It's also, now you go into stores and they have, the kiosk where you do your order, right? You're your own cashier. This has been an elimination of jobs for years, and people have not been listening or trying to set up side hustles to do something else. And so they get out of the job, and historically, maybe they were able to get a job very easily, but now they're competing with all of their coworkers who also got laid off, and all the people outside of that company that also got laid off or lost their job. It's going to be very, very difficult, like very difficult. And you also have to keep in mind, for you to get hired now, like you have to be really good at your job. Like you can't be mediocre because the job market is so open and there's so many different candidates that you really have to be on your A game. And so if you're like a lower performer, or you're not as, intellectual or intelligent as some of your peers, that pay rate is now, you're going to have to go look for jobs at lower pay rates where you are at the top. And it's going to be very difficult for a lot of people. And so if that happens, nobody has money to keep buying into crypto. And people are going to say, but Cryptoviser, the ETFs. Well, the ETFs are individual investors. It's not like BlackRock BlackRock probably moves some of the ETF market, but the ETFs are owned by investors. And investors, we're talking about like retirement funds and all this kind of thing. People aren't working, they're not making money, they're not putting money in their retirement fund. And so the purchasing of all this Bitcoin, it will slow down. And so what does that mean for demand? Supply demand, right? And it's really interesting because a lot of people don't think that this is the situation, and it is. I mean, even on the Amazon website, they show you what Vulcan does. I mean, 75% of warehouse jobs are going to be gone. And what's next? They're going to do deliveries. They're already talking about creating robots for delivering, like, that go and deliver the package to the door. This is coming. And so once they roll out robotaxis and Waymos, it's going to be cheaper than getting a cab and Uber, right? Think about Uber. I think 60% of what you're paying to Uber, 60% goes to Uber, 40% goes to the driver, something like that. It's not a very fair split. And so if you have a robotaxi that can do it at half the price, well, what do you think people are going to choose? They're going to choose to go to the airport for $50 or $25, or even maybe probably less because it's subsidized. This is going to create a lot of issues in the economy and in the job market, and people have to adjust. You have to think about it like when coal mining, went away. People who were coal miners, that was the only thing to do in their area, but they have to be retrained to do something else. It's very difficult. It's a very crazy situation. And this is not really priced in the market, right? You also have to keep in mind, a lot of these companies are over bloated. This guy wrote this interesting post. He's a product manager at Stripe, and he said, I got a cease and desist letter from DocuSign for my free software as a service. A couple of months ago, I saw a tweet from somebody saying, I just found out how much we pay for DocuSign. And my jaw dropped. What's the best alternative? He said, me being naive, I thought, how hard could it be to actually build a DocuSign alternative? Turns out not that hard. In about a weekend, he said he built this and an e-sign compliant tool, and it was free. It cost him less than $50. So he shared it out for free. It went viral, and at the time, he was charging $0, completely free, and had over 1,000 users sign up on the first day until DocuSign sent the email that he's in violation of intellectual property. But then he wasn't. He said he wasn't, so he kept going on. And now he has this whole tool, this whole product with thousands of users. And if you think about DocuSign, right? I looked it up. DocuSign is about 7 to 10,000 employees for literally just a file that you sign, right? Why do they need that many employees? Like, can half of those employee jobs be replaced by AI? I'm not saying it should be. I'm saying that's what CEOs and boards everywhere are going to start thinking about. And this is one person with one, product. Think about once AI starts writing more code and writing more programs and projects and business applications. Think about Salesforce. I mean, Salesforce, you got literally, I think, tens or hundreds of thousands of employees. And most of those jobs are probably going to be AI driven, right? And so, how is that going to impact the market and crypto in general? Because crypto is like people invest in themselves first, then they invest in like stocks, and then they go to crypto. It's like it's many layers out. At least currently, this could change, but you have to remember like where we are in the cycle. When everybody's excited about it, that's usually the end of the cycle. Bitcoin is corporate treasury. Why Meta, Amazon, and Microsoft all said no. Guys, they said no because of the risk. MicroStrategy, what they are doing right now at all-time record highs and getting other companies to buy in at all-time record highs, if you can't see that there are going to be people that are kind of counter trade this just to get the Bitcoin cheaper so that they can buy it, right? Because if GameStop bought at $100,000 and they're able to push the price down to 50,000 or 40,000, and then GameStop has to sell those coins or they go bankrupt or whatever, that could be a big issue. But these counter traders, they could say, whoa, we're going to go buy that Bitcoin direct. Maybe it's even MicroStrategy that buys it direct, right? And so we will have a correction at some point. How deep it will be, I don't know. But the idea here is that they have to continue to buy at this rate forever, which means MicroStrategy has to keep issuing more debt to buy the Bitcoin, to keep the price propped up, which effectively is a Ponzi, right? I'm not saying MicroStrategy is a Ponzi, but what they're doing by taking out debt to buy more Bitcoin to prop the price up, they have to do this forever. They have to continually increase what their purchases are, because right now they're just trying to effectively scoop up all the Bitcoin that's mined. But obviously, you guys see, it really hasn't had that big of an impact. All these announcements, all these Bitcoin treasuries that are coming out, everybody announcing, well, I bought half a Bitcoin. I bought one Bitcoin. Now I have this many on my balance sheet. It's like, who cares? Like, you don't do this with any other stock. And so they're doing it because they want other companies to get into the Bitcoin thesis as well, which I get. But now is not the time to be buying it, right? And so there are probably a lot of companies that will buy, but they're going to buy in a bear market, not in a bull market. And anybody who thinks that's a bad investment thesis literally doesn't know what they're talking about, because you're not supposed to buy high and sell low. You buy low and sell high. And if you think 100,000 is low, just wait. Just wait, because we are definitely going lower. But anyway, where are we? Here we are. So Jim Chanos responded to a new video where Michael Saylor is basically saying that they can't be margin called. So let's listen to the video. Let's listen to what Michael Saylor says, and then we will see what Jim says, and I'll give you guys my opinion. And keep in mind, I want you guys to remember that just a few weeks ago, Michael Saylor said that there will never be a bear market ever again. Like, I don't think that he can really believe that, right? But he has to make everybody convinced because we are at all-time record highs. And he knows that if the buying slows down or stops, the Bitcoin price is going to go down. And then what happens to MicroStrategy? I don't even think Michael Saylor knows. He's going to probably say, oh, no, totally fine. We don't have anything to worry about. I'm not so sure about that, especially after the last bear market. We saw Voyager, Celsius, 3 Hours Capital, Terra Luna, BlockFi, Genesis Trading. All these companies went down. And then we had the Bitcoin mining companies went down because they overspent in the bull market and they didn't think about the bear market. Nobody saw these risks except for us on this channel. We were screaming these risks literally at the peak of the bull market. And then when we were rotating into a bear market, I told my viewers that I was selling, specifically Cardano, because the price rotation was very clear that we were entering a bear market. And people were like, Cryptoviser, you're an idiot. We have an extended cycle. You don't know what you're talking about. You're the stupidest YouTuber in the world. I don't know whether these were bots or humans, maybe a little bit of both, but at the end of the day, they were all wrong and I was 100% correct. And I'm not here to be correct, right? I'm here to give you guys my analysis and opinions on the market. Could I be wrong? 100%. Am I telling you what to do? Absolutely not. Am I telling you what I do in my portfolio? Sometimes, sometimes not. Most of the time, the answer is not, because I don't want this channel to be about what I'm investing in or what you should invest in, because I'm not here to tell you what to invest in. Here to give you guys an analysis of where we are in the markets and what cryptos are maybe topping out, which cryptos have potential, which cryptos are gone, right? So let's listen to what Michael Saylor says. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up, hit the subscribe button if you want to help support the channel, become a channel member by clicking the join button down below here on YouTube to learn more. Let's listen in. So what he's saying does have some merit, right? But we don't know what would happen in that situation because we're not there. There's still a board, there's still investors who have a say. But here's the deal. This is what I keep saying. MicroStrategy and all of the products that they have, all the debt instruments, these are not for everyday people. These are not for retail investors. These are not for you and I, period. They're allowing you guys to access it and trade it. But this is not, these products were not built for us. They're built for institutions. They're built for Wall Street. Because Wall Street, they don't care if they lose billions of dollars over the course of 5 years. If they see the 10-year time horizon, whoa, we're going to be a lot richer, right? They have money they can throw around. They have money that they probably could afford to lose as well. And they don't have the need to constantly look at the price. And so that's who's investing in these kind of instruments of MicroStrategy. And the fact that retail is getting involved and paying premiums to the stock with the underlying Bitcoin, they're paying for these debt instruments because they want to get 10% annual yield. Guys, huge risk. Gives literally the same vibes as we got in DeFi summer, where everybody was loaning their Bitcoin and their Ethereum and their stable coins to all of these DeFi protocols that were giving them 10% interest. And I remember saying at the time, like, is 10% worth losing it all? Is 10% worth losing it all? And the answer is no, it's not. All of these Celsius, oh, put your money with us. It's totally safe. You're going to get this 10% yield. Where is the yield coming from? And that brings us to what's going on in Kraken right now. Kraken has now launched Bitcoin staking via Babylon. And this CFA, who we heard from earlier in the video as well, he said, where does the yield come from? Because if you don't know where the yield comes from, you are the yield. And even if you do know where the yield comes from, it doesn't mean that it's safe, right? These investors, these retail investors that are buying Strike and Stride, these are the debt instruments for MicroStrategy. They're buying them because they're paying dividends, right? Strife is paying 10% dividends. But I've literally seen posts on social media where these people, they don't even understand what they're buying into, because they're like, well, if I buy it at $103, I'm getting 10% forever. But if this drops down to $50, I'm still getting 10% of my principal. It's like, no. You're getting 10% of the Strife price, not 10% of the principal. That's a big fucking difference, right? So if you buy, let's say it's $100, that's the par price for this. If you buy for $100, right? Let's say you buy $10,000 worth, and then you're getting 10% a year, that's $1,000 a year. But if Strife goes down to $50, your balance is now $5,000. And now you're getting $500 a year. And if it goes to $25, and I keep going on and on. Now you could say, well, this is why, they'll issue more to keep it level. It's like, not in a bear market. In a bear market, this could all collapse. And so saying that there's no risk, Jim Chanos said, there is, of course, recourse to strategy if the convertible debt has not been converted to equity when due. How does he not know this? But the thing is, it would be converted to equity, which is their stock, and then immediately sold, especially if the price of MicroStrategy declines and the price of these debt instruments decline, this idea that like MicroStrategy is trying to sell this to you, no, that's a fool's game. They were really selling this to Wall Street and saying, if you want to get wrecked in here, get wrecked in here, right? Because that means Wall Street has to invest less money in this debt because you're going to do it. And there's literally people who are putting their entire paychecks, their entire retirement accounts in these debt products just to get this 10% yield, which, by the way, they can stop paying at any time for any length of time. And so when everything's going great until everything's not going great. And so we're at this point in the cycle where people are like, oh no, there's no risk. There's clearly risk. Okay, so where does the yield come from? From this new Babylon Bitcoin staking. Well, I went to the Kraken website, and they actually do say introducing Bitcoin staking, new opportunities for clients to earn yield in their Bitcoin holdings. Because, by the way, just so you guys know, Bitcoin does not have, it's not proof of stake. There's no actual staking mechanism built into Bitcoin. So they said, we're excited to announce the launch of Bitcoin staking through a new integration with Babylon, a Bitcoin native staking protocol. No such thing. This integration enables clients to earn passive rewards on their Bitcoin without bridging, wrapping, or lending it out. So people would say, oh, wow, Cryptoviser, this sounds great. Okay, so how are they doing this? How are they earning passive rewards? Okay, because this is very difficult to find out, almost impossible, actually. Beginning today, they say, this is Kraken, clients choose to stake their Bitcoin directly with Kraken. Their Bitcoin is delegated via Babylon to a secure proof-of-stake networks. Staked Bitcoin rewards are paid in Babby, which is Babylon's native token. Clients retain full ownership of their Bitcoin, which never leaves the Bitcoin blockchain. The staking mechanism is governed by a smart contract, so users and third parties can verify how rewards are handled. Bitcoin doesn't have smart contracts, so what platform is the smart contract built on? Is it built on Babylon? Sounds like that. So Babylon is a third party, right? So now you're introducing more risk. And by the way, in the last cycle, they told us also, oh, your coins are totally in your possession. We don't even use them. We don't even touch them. It's like, so what am I staking? What am I delegating my coins to? Oh, you're staking on a network. But if I'm holding the coins, how can I be staking to the network? And if I'm staking to the network, but I'm not giving them my coins, how are they actually using my coins to earn yield? By the way, none of this explains any of that. It says clients retain full ownership of Bitcoin, which never leaves the Bitcoin blockchain. The staking mechanism is governed by a smart contract, The Bitcoin staking protocol also includes cryptographic safeguards to deter and penalize malicious behaviors. Clients can unstake at any time with a 7-day unbonding period before the funds are returned. So you have full ownership of your Bitcoin, but you can't access them when you're done staking for 7 days. This is coming from Kraken. Like a regulated crypto exchange in the United States. So I went to Babylon's website, and because I still don't understand how they earn the yield and what the yield is. Okay, by the way, this second step, most investors would never even do, right? They're just like, oh, let's go stake on Kraken with Bitcoin. It's like, but how does it work? Bitcoin doesn't have a staking mechanism. Anyway, so on the Babylon website, this is step number 2. I would say like 50% of investors wouldn't even go to step number 2. So if you look here, they have so far, supposedly, they have 46,000 Bitcoin staked, about $5 billion. Okay, I want you to think about MicroStrategy. They own they own 592,000 Bitcoin. So Babylon supposedly has just under 10%, about 8% of what MicroStrategy has just in staking on Bitcoin. So what happens on Bitcoin stays on Bitcoin. No more wrapping or pegging. Stake Bitcoin directly and securely. So it's not wrapping or pegging. So what is it doing? It doesn't tell you here. It doesn't tell you here. And then it says request unbonding at any time. Your Bitcoin, your rules. Request unbonding at any time. but then you have to wait 7 days. So it's not really any time. Supercharge the Bitcoin network, become a Bitcoin supercharged network and take advantage of Bitcoin security, Bitcoin liquidity, and Bitcoin community. But what does that mean? Become a Bitcoin supercharged network. Like what is this? This is their website, right? Receive rewards by locking Bitcoin in a technically secure way to help validate other blockchains. No wrapping, no pegging, no bridging to another network. It all happens within your own wallet. Okay, but how? How are they doing this? They don't explain any of that. Whether you wish to bootstrap a new network or enhance the economic security of an existing one, the Babylon Bitcoin staking protocol brings Bitcoin security to your door. Okay, but how? How? So we click learn more on Bitcoin stakers, and it says unlocking 21 million Bitcoins to securely decentralize the economy. But again, it doesn't tell you, this is their whole staking page. It literally doesn't tell you anything about how this works, how the yield is generated, how you're going to make the money, how you're, like, none of that. So if you go to the Bitcoin interface for Babylon, it shows 46,000 Bitcoin under total value locked. The staking reward is 0.41%. This is the annual percentage rate. This is a dynamic estimate of the annualized staking reward based on current network conditions, and it refers to staking rewards rather than traditional lending interest. Rewards are distributed by Babby tokens, but shown as Bitcoin equivalent rate relative to the Bitcoin initially staked. So you're getting rewards in the Babylon token. You're not even getting it in Bitcoin yield. So you get it in the Babylon token and then you got to convert it to Bitcoin. But if everybody's doing this at the same time, how, like, there is a lot of risk here, like a lot of risk, and all for 0.41% in, I'm guessing that's in Bitcoin, which is not in dollars. So it's probably a little bit more, but I don't know. It seems very, very risky and not very clear. How does staking work? Bitcoin holders lock their Bitcoin using the trustless and self-custodial Bitcoin staking script for a predetermined time in an exchange for voting power in the underlying proof of stake protocol. In return, Bitcoin holders earn a yield. But remember, you're getting the yield in the Babylon token. So you're actually, okay, so I think I get it now. Basically, you're loaning your Bitcoin to power the Babylon ecosystem. So the Babylon ecosystem is backed by your Bitcoin. And if it all goes down, what happens? I don't know. Maybe you get to keep your Bitcoin. Maybe you don't. Maybe you get to keep your rewards. Maybe you don't. But to me, it's just too much risk. It's too much risk. And again, we don't know where the yield actually comes from. So that brings us to this. And by the way, this whole video is about where we are in the cycle, right? So when I'm reading this, like, Kraken's adding Bitcoin staking through Babylon, but they're making it seem like you're actually staking Bitcoin, but you're really just pledging the Bitcoin to power the Babylon network to then stake your coins, but you're really just staking the Babylon coin. I don't know. It just seems like a lot of nonsense, but more a lot of risk. And the risk is really, really what I'm concerned about. And so what I showed you guys at the beginning of the video, this famous athlete, Alex Crognelli, who's an athlete with San Antonio Football Club, I guess, said, I'm selling my rental properties for Bitcoin. I've been considering this move for some time, and timing now makes sense. I've accepted an offer on one and expect to close in a few weeks. The other one will be listed in early 2026. He said, I bought my first rental in 2018, believing they would play a major role in my path to financial freedom. But in 2020, I discovered Bitcoin. Over time, my conviction in Bitcoin's asymmetric upside has only grown. Now I see more potential in a portfolio of Bitcoin and Bitcoin-related assets than holding rental properties. So it's time to make the move. The level of interest in my house tells me investors won't stop buying rentals anytime soon. But in my opinion, the writing is on the wall. The time to commit to Bitcoin is now. Okay, so again, at the top of the market, doesn't really make sense. But he is saying that he's going to put his other rental properties on sale next year, right? And so, yeah, I mean, 2026, I think we're going to be in a downtrending market at least half the year, if not the full year. And so that could be a great opportunity to then go and buy the Bitcoin with it. But I agree with what he's saying here in terms of the best asset for a longer term investment. Because growing up, many of us believed that home ownership was the ideal investment, right? That was like, I made it. And really, things have changed. And that's not really the case anymore because you have property taxes, you have local taxes, you have utilities, you have maintenance. Now, people say, well, but Cryptoviser, you're going to live in the house anyway. So why would you not want to own it versus rent it? Well, renting, you don't have to worry about any of the other stuff. You have one fixed cost, potentially forever, depending on where you live. And, you can always move. If there's a big maintenance problem, you could just move. You don't have to really worry about it. And in a home, like think about it. If you move into a home or an apartment in a large building and there's a major issue, I had a friend who lived in a building and there was a major piping issue because the building was, older. So the piping issue was going to cost something like, I don't know, 20 to 30 million dollars, like at the low end to fix. And so the HOA fees were going to go up substantially. And so this person told me like they're in a bind because they either stick it out or they put it on the market and take a loss because everybody else in the building is also putting their homes on the market and nobody wants to buy at these elevated prices because of the maintenance issue and the rise in the common charge rise to pay for that, the assessment. So they're kind of in a bind. And if you just renting, you didn't have to worry about that. So there's risks in every investment. Personally, I do think, people putting all their money and time into paying off a home just so when they're 70, they could say, well, the home is paid off. I understand from having a nest egg, but I think that there's a premier asset out here like Bitcoin where you could have made a lot more money. I mean, most people make more money in the stock market than they will in real estate, generally speaking. Now, if you're renting and stuff like that, maybe you're using it for cash flow or other stuff. But the majority of people, yes, I do think that cryptos and even stocks are probably I mean, you're getting 7% a year in the stock market on average, and that's at the low end. So 7% a year by 7 years, you've already doubled your investment. Most homes, they've maybe gone up, over 7 years, maybe 5-6%, right? And so you really have to kind of look at it as a different market and maybe an aged market. And because of all the things that were put on top of these homes, right? I mean, to fix a roof is like $30,000-$40,000, right? A water heater, $1,000, and these things can just keep happening. And you can't foresee it. And so, yeah, Bitcoin, there is no overhead, there is no property tax, there is no utilities, and you can still use it as a financial instrument. So I do kind of agree with him on that, but it is very interesting where he's showing, selling the home. And this is a real big conversation right now, the fact that home prices keep going up, but the cost of the home in Bitcoin keeps going down. And this shows you the exact explanation as to why effectively Bitcoin is being viewed as this premier asset. But there is a point where Bitcoin is going to potentially top out or peak out, right? And that may not have anything to do with the fundamentals of Bitcoin or people's conviction in Bitcoin. This may just have to do with the geoeconomic perspective, right? If people are losing their jobs to robots, you're damn sure they're not going to be buying Bitcoin. But some people will say they will. And by the way, it's not just Bitcoin, because remember, Bitcoin is very highly correlated with the stock markets, and stock markets are starting to show some pretty interesting signals. Peter Brandt highlighted this, saying, is this chart as ugly as it appears? And this is the Apple chart, and he shows, let me see so you can see the dates here. This is from 2024, the middle of 2024. This is a 1-year chart, it looks like. And you can see that from the end of 2024 into the beginning of 2025, it looks like a head and shoulders pattern. And typically with a head and shoulders pattern, you end up moving much lower, right? It just kind of completes the gap on the left side of the head and shoulders pattern. And so he's predicting on this chart at least, and he does not use charts for predictions, Peter Brandt. He's showing Apple going from about $200 level to about $137 level, which is about a 15 or 20% drop, I think, if I'm doing the math correctly. And listen, there's going to be a lot of people who are going to say no way. But most of Apple investment is not coming from retail. I mean, anybody who trades the market is not trading Apple. Same thing, like maybe Tesla because it goes up and down, but you're not trading Apple, you're not trading Microsoft. Like these don't really move, and they're not really innovating, right? I mean, what is Apple? They have liquid glass on their screen. That was their launch. That was like the big thing. Like we've been working years on this. We have millions of employees, and we spend billions of dollars, and look at what we're creating. Meanwhile, remember, they rebranded to Meta for the metaverse, and they literally put tens of billions of dollars every single year since that rebrand into developing the metaverse, and we have nothing. So Meta created nothing. Apple created a yellow iPhone and liquid glass that literally nobody asked for, right? That's their innovation. Like, wow, your button on your screen can be somewhat transparent to see your background on your screen. It's like, who fucking cares? Like, I don't think anybody asked for that. And if you add that, that's just kind of like a feature, right? It's not like this is this is what they've been developing for the last 5 years. I mean, are you kidding me? Anyway, you guys kind of get the point. And he also posted this chart, Peter Brandt, saying, does anybody have a parachute? And this goes back all the way to 2001. And you can see the chart has just gone up pretty parabolically. And he thinks there's going to be a parachute to come back down. I mean, I do think eventually, yeah, Apple's reign is going to end because they're not innovating anymore. They're not creating any more value for their customers. And this basically happens with most companies. I mean, if you think about like Sears, right? Sears was a department store, and they just kept doubling down on doing the same thing. You see the same thing with a lot of the other department stores right now. I went into a Macy's and a Kohl's the other day, and I was shocked at the Kohl's. Like the prices are higher than what you're getting at almost any other store, and for like mediocre stuff that's just been sitting, on the shelf for probably months or years because they're not selling anything and the place was empty. So instead of trying to like do something different, they just keep, oh no, we're just a department store. We cannot reimagine, our business model, and they're going to fail. Same thing with GameStop. GameStop says that they're totally fine as a company. I'm like, really about that? And now that they're going to be doing trading cards and Pokemon cards, and that's going to be their big thing. It's like, how much money can you really make on Pokemon cards? Maybe a lot. Maybe I'm wrong on that, but I don't know. It just seems like these companies are just coming to a point where they're no longer the company that they were a decade ago or 2 decades ago in terms of innovation and creating new things. And so there is definitely an argument that as people are divesting from these kind of assets, that they're going to be reinvesting in crypto. But again, this stuff takes time. It definitely takes time. But there's a lot of opportunity here, right? There's opportunity to sell at the top and buy during corrections. There's an opportunity to just keep buying in. There's also an opportunity to look at other technologies within the crypto space. One of the things that we've been talking about is Internet Computer and Dfinity. This user on X said, remember Dfinity, one of the most hyped projects in 2021 and a chunky airdrop for this person? They quickly fell out of the spotlight, but did you know they're still active and actively power a component of Liquidity version 2? That's, I think, an interoperability lending protocol. The Internet Computer underpins ARM, the autonomous rate manager built by this user. ICP provides a tamper-proof compute layer that seamlessly integrates via Ethereum, via Chain Fusion, which is basically their interoperability technology. ARM uses this to automatically manage borrower rates, checking Trove status hourly on the main net and adjusting rates as needed. It's fully self-sustaining, charging 0.1% fees on managed debt to fund the computation costs within the Internet Computer smart contract. That's pretty good technology if you ask him. And yeah, we've been talking about Internet Computer. We've been talking about other ecosystems that have a lot of potential here. XRP is one of them. Now, personally, I don't hold XRP because I believe that it is, I mean, I may hold a little bit, but I don't think it's anything of substance. But I mean, XRP, there is so much hype about XRP right now. But I always tell my viewers, like, even if you're bearish in the short term, like, don't underestimate what Ripple can do, because everything that they've set out to do, the XRP ecosystem and Ripple, they have succeeded at, or at least are on the way to success, right? They haven't actually failed really anywhere in their existence. Ripple has done a very good job with continuing to expand, with fighting the SEC, with garnering support from other ecosystems as well. And I think there's something to be said about that. Now, listen, my concern with XRP is that Ripple is and says they will continue to sell their XRP, which is about 30 to 35 billion coins. And they get 1 billion unlocked every month that they can sell or use for whatever they want. And they said they're going to continue to do that. And so if we have an XRP ETF, they're going to be selling into that. And so it's just going to be really a transfer of money from Wall Street to Ripple. And it's not really, that dynamic is not going to impact the retail investor or the price. But I think that the technology that Ripple is developing and has developed, I mean, look at Ripple. XRP had no stable coin besides their own. And as soon as Circle went public, they launched on XRP. And so clearly there was communication and conversation going on there between the two before they IPO'd, and a good cohesive, partnership there. And so they were able to do that. The only other blockchain really in the top 10 that has no stablecoin compatibility is Cardano. And once XRP partnered with Circle and they launched natively, I said, that's it. That's it. And then Charles Hoskinson started saying on X that that Circle will not integrate on Cardano, that Tether will not integrate on Cardano, citing low usage, low DeFi, low interoperability, stuff like that. And so the pathway is clear, and we've been talking about that pathway for quite a while. And I really was concerned about XRP for that reason, from my investment thesis, right? But now I am more bullish on XRP. I'm still worried. I'm still concerned about the selling from Ripple. That is a huge issue. But if we have a major correction here, this is a great opportunity, guys, because trust this, all the stuff that has happened over the last few years with Ripple, if Ripple was not going for global dominance in payments and being payment rail for cross-border transactions, they would not have spent hundreds of millions of dollars to fight the SEC and then win. They would not have offered to buy Circle and then get it listed immediately after they go public. There is something to be said about that. And like I said, in Ripple's entire existence, they have achieved everything they set out to achieve. And you cannot say that about most of these other ecosystems. And so as much as I'm concerned about the value aspect of XRP, I'm less concerned because I think that they are going to achieve. And so there we go to the title of this video, making $1 million. And by the way, I'm going to play this video in a second. It's about the $4,300 XRP. But you can make money on the way down. You can make money on the way up. You can make money sideways trading. But you have to understand where the cycle is, and you have to really realistically be able to look at it and say, wait, we are close to the top of the market, if not at the top of the market. Every indicator potentially says, yes, we are going to potentially go much, much higher, but that's going to happen over a very short period of time. And at the end of that, we're coming down hard. And so when people say, Cryptoviser, you're such a bear, there's no way we're going to hit 90% drop in the price. It's like, well, if we go to $200,000, which a lot of people think is just baked in, it's guaranteed, 100% guaranteed, can't miss it. It's like, wait, what? But let's say we go to $200,000. $200,000, if we subtract 75%, that's 150 down, that brings us to $50,000. There is no doubt in my mind we're going to hit $50,000 in the bear market. And so, yeah, 75% from where we are would be 25,000. That's still more than the all-time low, or I should say the cycle low. The cycle low was 15,500 when FTX collapsed. We're already 8x from there, right? And so Bitcoin, in my view, the Bitcoin trade is probably over, at least temporarily, at least for this cycle. It's not going away forever, and it will recover. But that I think that we're more likely to have a corrective phase than go to $200,000 or $400,000. And I could be wrong on that. It is what it is. But really what I'm looking at now is these altcoins, because I do think that we're going to have an alt season. I don't know exactly when, but I do think that we will see a lot of money getting pumped hard into the cryptos, the blockchains with fundamentals. And that is XRP. That is Solana. That is Internet Computer. That is a lot of these other ones. But keep in mind, when you start to see Hyperliquid dropping substantially, SWI dropping substantially, that would tell me, first of all, the billionaires are selling currently. 100% sure the billionaires are selling. I don't think anybody would be able to convince me otherwise. SWI, you think Raoul Pal believes that SWI is really worth $10 billion? He knows it's not. And you know how I know he knows it's not? Because by the end of the cycle, he's going to have no SWI in his portfolio. Guaranteed. Guaranteed. And you know who's still going to have SWI in their portfolio? You. Not literally you, but I'm just saying, figuratively you, when we're talking about retail, right? Because they're going to be buying it saying, oh no, SWI is going to be number 5 crypto. It may. But in a bear market, you're going to be left holding the bag. And that's what we have to keep in mind, right? MicroStrategy, retail has this wrong. Retail thinks that these debt instruments are for them. They're wrong, and they're going to lose hard, because Wall Street will do it intentionally to wipe them out. And then who's going to buy at the bottom? Wall Street. And who's going to be selling? Retail, right? This happens every cycle, not just in crypto, in stock market as well. And so, yes, I'm looking at Internet Computer. Yes, I'm looking at XRP, because there are going to be entry points, whether it's now, whether it's tomorrow, whether it's in a year from now, there will be entry points. And for people to think that they're not going to be, and not to secure profits so that they have money on the sidelines to buy during a flash crash, during a geoeconomic incident, during just a downtrend in the market. Everybody's been anticipating, including myself, that the Federal Reserve was going to cut by now. And they did, by the way, in 2024, they cut twice, and the market rallied after that. But then they stopped cutting, and the market came down. And everyone kept saying all in 2025, oh, they're going to cut, they're going to cut, they're going to cut. They're not cutting. And I don't think they're going to. If they cut, it's going to be 0.25%, 0.5%, which is very, very low to begin with. It's not going to do anything. And so the president is fighting with the Federal Reserve, saying that they need to cut. Federal Reserve is not cutting. It's setting us up for May of next year, May of 2026. The Federal Reserve Chairman Powell, his term as a chairman ends. And so this could potentially set up where they're publicly fighting with each other. But behind the scenes, Trump probably told them, keep rates high until we get a new Federal Reserve chairman. And then a new chairman comes in, drops rates the first day. Guys, the market is going to pump so freaking hard. But that's potentially a year away, right? We're in June of 2025 when I'm recording this, almost July. And this whole thing with Federal Reserve Chairman Powell is in May. And so he may stay until June, July when they vote, or they're going to vote before his term ends. We'll have to wait and see. But this brings us to this video. It's from a recent conference, and the Teucrium, I don't know how to pronounce that. This ETF CEO, this at the XRP conference in Las Vegas, basically talks about $4,300 XRP. Let's listen in.
Robbie, Mitch Nick model.
Mitch Nick model. Mm-hmm. That says $4,300 XRP. So that's pretty happy.
Oh, Sal.
But, any good businessman cuts it in half again, and then maybe thinks about it. And there are a lot of assumptions in that model. There are other models that say $5. Mm-hmm. So, take your pick in between. I think it'll take time. I think the industry still needs to mature. The XRP overhang which is substantial, needs to be utilized, and that's going to take a while for the real price explosion that people expect.
Exactly. Exactly. And by the way, this is coming from a Wall Street ETF CEO. They know the market psychology and the market sentiment. And they know when everybody's getting bullish and everybody's buying at all-time record highs, regardless of how high you think Bitcoin's going to go, we are literally at all-time record highs. And there's a lot of people who are not getting that. They're not seeing it. And being on YouTube for this long, we have been able to now identify the market cycle sentiment, and the fear and greed index has come down substantially, and people are looking at this as bullish, but it's not bullish. It's bullish when we're in the red and everybody's in peak fear. But for us to get in the red into peak fear, meaning we have to drop in the market substantially, where people are like, wait, is the bull run really over? Is Cryptoviser right? Yeah, Cryptoviser is right. But that's the point that you buy. Red is buy, green is sell. Red is buy, green is sell. Everything else, in my view, is sell, right? Everything else is sell. And if you're buying when we're in the green or in the yellow, you can't sell right now. If you buy in the red, you're almost always going to be able to sell. Almost always, at any point. And it doesn't matter if you're selling at the top, which is going to be the green, right? We've shifted back down to yellow because now where we are at $100,000+, this is becoming the quote norm. But we've really only been in this $100,000 range for less than a year. And the cycles, like from top to bottom, bottom to top of the markets, typically are a year based on historical trends. And so putting this all together, it kind of lets us know there is opportunity to make money in a bear market. There's opportunity to make money in a bull market. But we have to identify which part of the cycle we're in. That way we can make those decisions. That way we can secure our profits. So when the market turns, we can make sure that we're buying in. And then when the market turns, selling out. This is how it works, guys. This is how it works. Let me know what you guys think down below in the comments. Let me know what you're doing in your portfolio. Don't forget to give the video a free thumbs up, hit the subscribe button, turn on notifications. That way you never miss a new video. We upload every single day of the year. Thanks for watching. I'll see you guys on the next video. Crypto on.